We now have Mr. Ashok Nair, MD of the company, now joining us. Mr. Nair, good afternoon. Ashesha this side. And thank you for taking your time out and joining us here on ET Now. A very solid, well-rounded quarter is what you've reported for the quarter gone by. Margins have expanded. All three business lines have reported very strong growth. What would you flag as the standout driver in the quarter gone by, and what led to this kind of growth?
So good afternoon, Ashesha. Thank you for having me here. I'll just first share the quarter one highlights. As you said, that we have started our FY27 on a very strong footing with an 16% revenue growth and 18% EBITDA growth. In fact, helping our EBITDA margin from 24.1% to 24.5% this quarter. Now, what's more important is even in an inflationary and uncertain global environment, disciplined execution has allowed us to protect profitability and maintain a healthy EBITDA margin of 24.5%. What the highlight you said, our domestic formulation business continues to outperform the Indian market, growing nearly 15% versus the industry growth of 11.6% during the quarter. And what's more important is it's encouraging is that our growth is volume-led. We delivered 8.4% volume growth against an industry volume growth of 2.6%, reflecting a stronger prescription generation and a market share gains. An important milestone for us this quarter was entering the top 50 companies in the Indian pharma market and becoming one of the fastest growing pharma companies in the country. In fact, we were the fifth fastest growing company in this country. The API business grew more than 35% this quarter on the back of a plant unit coming back to operations, which was temporarily impacted by the fire last year. Our IF growth again grew at 8%, where last year we had a little muted growth. In fact, the market has recognized our performance journey. Since March 26, our market capitalization has increased by nearly 57%. And the highlights, we also won 3 prestigious awards. We got the top nephrology company for 2026. We also got an award for breakthrough pharma innovations. So our ambition is simple, continuing delivering market-beating growth, strengthen our international presence, scale our API, and build a larger, more future-ready pharmaceutical company.
Wonderful to hear that, sir. Meryl D'Souza here also joining in on this conversation. So your API business has grown at a very strong 35% rate, as you just pointed out. And this was even with the fire disruption at one of the manufacturing blocks. Now, last quarter, you'd said that the plant was fully operational and that margins should start to normalize back towards the historical 30% levels. So tell us, is that margin normalization now largely complete? And is this quarter's growth rate the new sustainable run rate for you? Or is there more headroom to grow from here on?
So see, there was a fire last year, as you said. So hence there is a base effect. But we have normalized our operations. Yes, margins are healthy and encouraging now. And in fact, all the 3 businesses have margins on the similar way. So, and we are only looking to grow from here. And there is a push in API. There's a sharper focus in the way we are looking in the overall our API business. We brought a new CEO for running the business. And we are riding on that wave. And we are sure that API should have a very stronger presence and more robust growth coming way forward.
So that's as far as the API business is concerned. But let's also talk about international formulations business, because that segment also grew by a modest 7.5% to 8% against domestic growth of about 15%. You've flagged new market entries: Myanmar, Vietnam, Philippines, Sri Lanka, Thailand, South Africa. Which of these do you see moving the needle first, and what's the timeline with respect to meaningful contribution coming in from these additional markets?
Yeah. So before that, what we have done is we have also restructured the whole international formulation and then the regulatory business. In fact, we've brought new talent who are heading this business. And our focus has been on immunosuppressants, distribution-led market across regulated and emerging markets. So we are strengthening our regulatory R&D and to be ready, audit ready for all the scale global expansions. Now, the countries which you said, of course, I'm sure you must be aware that we got an approval for naproxen as an OTC in Canada. We have 3 CDMO projects completing this year for the UK market. The new markets which we are entering are the ones, of course, in Africa. We just moved into South Africa. We moved into Ethiopia. We just got approval from the Zanzibar region and the Nigeria one, and our emerging markets, of course. So I think there's an overall increased presence in the newer geographies, and also our product pipeline is getting stronger. So new customers in our existing market with newer products, new products with strong R&D capabilities, and a well-defined output of almost 4 to 5 number of formulation molecules coming every year. So we also now planning to deepen our foray in the CDMO space. We just worked on 3 projects. We are looking into the way we have delivered. We are getting 2 more from the UK-based company.
Understood, sir. You've also set a target of building a 200 crore plus immunosuppressant portfolio, and you flagged immunosuppressant as a key factor that you're going to be focusing on going forward. Can you help us with where that immunosuppressant portfolio stands today, and what's the realistic timeline to getting to that 200 odd crore levels?
See, today, of course, before that, our immunosuppressant is almost growing at 11 to 12%. Today, we are at 140 crores. And the way we have structured ourselves that we want to get into the 200 crore possible. And with some of our immunosuppressants getting into further presence in some of the international markets, we are sure that we are on the path to achieve this 200 crores. We are also developing tacrolimus inside our own R&D space. So that's another product which we should be able to enter into newer geographies and markets.
Okay, also wanted your thoughts on cost inflation, because I believe at the end of last quarter, you did tell your investors that cost inflation continues to remain a concern on the back of the geopolitical situation, which continues to remain uncertain even today. What's the update on that front and the likely impact on your financials?
Okay, so as we mentioned earlier times that we have closely monitored the evolving geopolitical situation. So as of now, there is no material impact on our business. And we do not foresee any significant disruption at this stage, given our current inventory levels. We have also undergone discussions with our key global customers for price pass-through as on date, and glad to inform that 13 customers have already obliged. So plus there's an upside due to our exchange rate upward movements. The other thing is our diversified geographical presence and continued expansion into new and emerging markets provides strong resilience for us. We have been quite proactive and have managed this well, and that's why you see our EBITDA expansions. And ultimately, this is what talks about our structural growth and operational efficiency.
All right. Understood, Mr. Nair. Thank you so much for taking the time to speak to us. It was a pleasure having you on a show right now with us.
Thanks, Hassan. Thank you very much.